People put their hard-earned money on lucrative investments for a variety of reasons, but the majority of the time they do so to achieve financial freedom. Have you ever wondered how you can retire on Tesla stock in a few years? Many people today believe that they can retire early by investing in the leading EV company stocks. You definitely wouldn't want to miss this one. Although it's a goal that not everyone can accomplish, being a stock market billionaire isn't totally unrealistic. Impossible, but if you invest regularly, make the appropriate investments, and stay in the market as long as you can, your chances of building long-term wealth are increased. Among the best ways to make money in the world is to invest in the stock market. One of the stock market's main advantages is the abundance of opportunities for profit. However, this comes with a high potential for reward and risk. The question now is, why invest in Tesla stock among all the valuable stocks in the stock market? Well, Tesla is more than just a car company. It may come as a shock to some that most Tesla enthusiasts typically provide their own projection models for the company's stocks. But it's true that in addition to being an automobile manufacturer, Tesla is also a utility, energy, artificial intelligence, robotics, and life-saving company that is well on its way to disrupting the biggest industries. In fact, many are confident that in a few years, Tesla will surpass all other companies in terms of market capitalization. Among them is Ken, a YouTube video creator who, according to his bio, left his job at the young age of 38 and is now running a few businesses. I tried everything, including stock investing, and the appropriate investments allowed me to retire. My goal, my love, and my passion are to uplift and assist people. Reach financial self-sufficiency. He discusses buying innovative stocks, multi-baggers, and other financial topics on his channel. He also explains down complex numbers in his estimates by accounting for free cash flows, growth in revenue, and addressable market in his base assumption. Tesla's valuation will reach $4 trillion by 2030. By then, his bull case scenario values Tesla at $10 trillion, which is presumably why he primarily concentrated on a straightforward $4 trillion valuation that takes share dilution and a $4,100 Tesla price into consideration. His worst-case scenario is the basis for the target per share. When talking about his Tesla projections for 2030, he stated that most projections would take the midline, but he is taking a price target of $6,900, which is closer to his bear case and provides a higher margin of safety. My bull case is $11,700, and my bear case is $4,100 per share. He continued, saying that my strategy is cautious in order to provide a larger margin of safety. Possession of money retire early, often known as FIRE, is a financial trend characterized by high saves and investing, for example, preserving up to 70% of one's yearly salary. Proponents of FIRE want to retire early and live off of modest withdrawals from their amassed wealth. The FIRE movement is a way of living that aims to achieve financial independence and early retirement. In the 2010s, the concept gained popularity among millennials in particular thanks to information exchanged in blogs, podcasts, and online discussion forums that helped them build online communities. In order to have more money to invest toward an early retirement or part-time employment, this movement pushes people to live below their means. However, for clarity, FIRE is not a dividend play because most dividend stocks don't move up or down when investing in high-quality growth firms. Instead, the greater your savings rate and the amount of income you don't spend, the faster you can make work optional. When your capital grows, you sell stocks to fund your daily expenses. For instance, if you have $400,000 invested and it grows at 8% annually, note that in this example, 8% was considered to be benchmarked to the index with an additional margin of safety. While your money grows, you withdraw what you need at $28,000 per month for 30 years because the invested capital keeps growing. At the end of that time, you will still have $200,000. However, if you decide to withdraw more, say $35,000 per month, you would have used up all of your money in 18 years. Of course, people have different needs and therefore different lifestyles. The cost of living has a significant impact on how long money will last after an early retirement. In addition to lifestyle, location is also a major consideration. The cost of living varies from country to country, and for the purposes of computation, there is an additional 40% to allow for a comfortable life. In other words, when a person retires, their cost of living decreases, and they spend less on traveling and socializing, though this varies from person to person. In any case, the bottom line is that when a person retires, their cost of living decreases because there is no longer an income tax. Tesla is a rapidly growing manufacturing and software company, growing at a rate of between 40 and 60% annually. Experts believe that by the time Tesla reaches maturity, the growth rate should resemble Apple's at roughly 20%, which is still considered a very high to make the most of life, without having to work till the great age of 60. Individuals have been yearning to retire early because, for calculation's sake, that is still too short. And that's where stock investing enters the scene. As was previously said, the cost of living varies among US, UK, and Australian cities. The cost of living is roughly the same, and it is estimated that $375,000 is sufficient to live a very comfortable life with $375 invested in Tesla stocks. This investment will yield satisfactory returns of 8% annually with a cost of living of $191. It should be noted that an additional 40% is added for a comfortable way of life, with $375,000 invested and withdrawals of $271,301 per month for the next 30 years. At the end of the 30 years, this translates to $30,726, which, under worst-case scenarios, means you'll need 91.46 shares of Tesla stock to retire comfortably with a high margin of safety. Depending on how much you spend now, you'll need either 60 or 100 Tesla shares to retire in Singapore, which is one of the most expensive places in the world to live in due to the high cost of housing. Germany's cost of living, the Netherlands' Hong regime, one may argue that Sweden and New Zealand belong in the same group as Canada. Residing in Canada, $325,000, with an average yearly return of 8% for living expenses, $1,301 plus 40% is $2,381. You will take out $2,381 every month for the next 30 years, for a total of $5,566 at a share price of $6,900. If the stock price stays low in 2030, you will only need 47 or 79 shares. Less so for other Asian nations to retire early and take advantage of the beach's sun. You must own Tesla shares. In addition to noting that there is risk in everything and that risk management is key, Ken stated that it is feasible to retire on Tesla stock in this new era and that based on the data provided, the risk of Tesla going bankrupt is almost non-existent overall. Although nothing is guaranteed and there are economic factors that could cause the company's stocks to rise or fall, owning Tesla stock has the potential to make you wealthy and eventually enable you to retire sooner rather than later. The good news is that, provided the business continues to be strong, Tesla shares will increase in value over time, meaning your money won't run out very soon. Right now, buying Tesla stock is definitely the best option for investors hoping to retire early. According to Adam Jonas, the corporation emerged victorious in the competition for electric vehicles, and the current state of affairs for electric vehicles consider the electric vehicle race as a marathon, and he said that Tesla was leading at mile marker 21. Join the others who have reached mile 2 or are still in training by subscribing to this channel to learn more about how to use Tesla stock to retire early.